Hey, folks, welcome to Weekend Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis video is for Tuesday, January 18th through Friday, January 21st, 2011. Well, folks, remember Monday is Martin Luther King Day, so Monday the 17th is closed in the markets, and again, we're going to turn our heads towards next week, which is promising to be an extremely volatile week. Now, over the past month or two, going really back to Thanksgiving, right around that November 26th time frame, the markets have been in a steady uptrend. I mean, that's really what it's been. The volume has continued to stay light, even in the new year, which is very, very strange. The volume has been unbelievably light. For instance, on Friday we did about 110 million. Thursday we did about 100 million. The volume on the SPY, which normally sits between 150 and 200 million, has been about one third to one half less normal. All right, now going back to last week, you can see we had a nice solid up week, almost a 2% gain on the SPY. We started on the previous Friday at around 127 and change, and we ended up just above 129 or so. So again, almost a little over $2 gain on the SPY over the course of the week, which is just under 2%. And again, very nice. You can see Monday we had a gap down, a little bit of worry come in, but the market was saved. Tuesday we started up, fell back down, and then they saved it again on the late afternoon session after hitting this gap fill right down here. Wednesday we started with a gap up, stayed up all day. Thursday consolidation, and then Friday another rally to push it up. The Friday effect is something I called on Thursday for, which is an up Friday. The basics thoughts on that is going into a holiday weekend, a 3-day weekend, a lot of people do shopping. All right, when shopping is a must or a key for the economy like it is, the markets will always end neutral to positive because they want people out there spending. You can't go into the shopping weekend with a 500-point down day on the Dow. People aren't going to be confident. They're not going to go out and spend when they hear that on the news. So you have to keep the market neutral to positive, maybe a nice little rally, and people will go out and spend saying, oh, look at this. We're at new 52-week highs on the Dow. This is great. I'm going to go buy that new flat screen or 3D TV or whatever. All right, so know that, understand it is very, very important. Now, what you can see here is we did break through the key 128 and confirm above the 128 level. That was the highlight of the week on the SPY. All right, the 128 level to 127.75 had been good resistance and was a master level. We gapped above it here on the 12th, which was on Wednesday. We stayed above it, and then rallied up on Friday. And again, it's almost like off the gap up. You had a consolidation day, and then rally on Friday. Now, coming into Monday, remember, markets are closed, but Tuesday things kick off. And this is what's going to be so dramatic about this week, folks. And while I talk about this, I want to show you the 60-minute chart stretching back to Thanksgiving. Here's Thanksgiving when we bottomed out. And again, I had made this call to the Research Center subscribers and the intraday stock chat subscribers saying that starting at Thanksgiving with Black Friday, right the day after Thanksgiving, the markets would go into a neutral to uptrend bias for the remainder of the year, and it's obviously stretched into 2011. All right, so now let's talk about what's bringing or coming next week. Next week is going to be an astronomically big week for this market. It's a 4-day week, but those 4 days are going to be slam-packed with action. I think this week will have much, much more volume. If this is a week that you're looking to do trades, this is the week to be involved in the research center or the chat room, and I'm going to tell you why. It's options expiration first. You know the big boys, the institutions, are going to whip those options left and right, and again, they want to make sure most of the options expire worthless, so there's going to be a lot of dramatic moves up and down in the markets. All right, that's number one. Number two, economic news and earnings are packed into 4 days. It is going to be a tremendous earnings week. You have Apple. All right, you have IBM on Tuesday after the bell. I mean, all these stocks, these are two big tech players that are going to be announcing. In addition, you have Citigroup. All right, then you also have on Wednesday Goldman Sachs, Wells Fargo, eBay. On Thursday, Google. All right, you have Google, GE on Friday, going back to a couple of these other plays. I mean, it's just going to be a slam packed with huge stocks. This is going to create intense volatility. Right, the volatility should return. We did 100 million on average to 125 million, I'd say, last week in volume on the SPY. I say get ready for 150 to 200 million on average this week. I really truly believe you will see 50% more volume in this market this week as a minimum, based on options expiration and based on earnings. Be ready. This is going to be wild, folks. We've got some good setups on the charts. We've got some key plays in the market in the play side, on the profit side. We want to make sure we focus on this stuff. I want to make sure we're doing some plays on Tuesday to get right into the mix and get us set up for the remainder of the week. Going to the daily chart, I just want to show you this, guys. What's so amazing here is that take a look at the volume. If I zoom out, I mean, this is really astronomical. Going back to the little dip, remember the dip we had after we went to about 122? You dipped all the way back to about 102, 103. Look at the volume and how it's decreased. And this is just something I think it's very important to recognize. Look at how the volume has continued to decrease as the market's gone up. This is called a negative divergence in the volume category, and something that we have to recognize. Now, does it mean the market's going to fall next week? No, it doesn't. If these earnings are good, based on what we've seen from the Fed with POMO and all these other factors, the markets could continue up. Are they extended? Yes, they are. Are they due for a pullback? Yes, they are. Is Options X an opportunity for the institutions to pull the market back? Yes, it is. But again, as far as I'm concerned, based on the strong uptrend we've been in, you cannot be sure of that whatsoever. I mean, look at this move. Just going back to September, folks, the markets were at 104, 103, and we're now at almost 130. I mean, that's a tremendous move for September, October, November, and then 2 weeks into January. That's 14 weeks of trading, and the markets have gone up basically 25%. That's approximately a 25% move on the markets just since September. I mean, is that incredible or what? It is incredible. But again, you have to monitor this negative divergence right here, because again, this does tell us that if there's any hiccup, and this is what I've said really since the new year began. I said, all right, guys, now you have to pay attention to the economic reports coming out of Europe and out of Asia, because again, if there's any sort of glitch out there, right now it seems like the Fed has full control of the U.S. economy, and based on the economic numbers here, as long as things are steady, as long as, Apple doesn't majorly disappoint, things should be pretty steady here. But if you have a glitch or something happen in Europe or in Asia or somewhere else in the world that's unexpected, that's when the volume will flow back. And you'll see days of volume where you go 300, 400, 500 million here, over here now when the markets are toppy, and that's what's scary to me. Because it doesn't necessarily mean we're going to fall on any particular day, but what it worries me about is that you could have a situation where you have another flash crash, because you have so many institutions long, so many individuals and mutual funds long, you get some sort of panic out there, and you can literally see that major drop on an intraday basis that is so scary. All right, again, I just want to bring that to your attention because, again, while I don't necessarily think it's on the near-term horizon, it's something that each and every one of us needs to be aware of so we're not caught with our pants down, right? I mean, that's really what it is. All right, so just keep that in mind, guys. Again, negative divergence, if you look at your MACD, we don't really look at that stuff much as in the Money Stocks Chief Market Strategist here, but you do have some unbelievable negative divergences on the daily. And again, it doesn't tell you that it's going to fall Tuesday, Wednesday, Thursday, Friday, but it does tell you to be a little bit more on careful watch. And again, just take your small gains. When you're long, if I'm long a stock, I'm not looking for 5-10% gain here. I'm looking for 2-3%, and I'm yanking that money off the table. It's smart investing. It's disciplined investing right now. Disciplined swing trading and even disciplined day trading, as it always has to be, especially on the long side. On the short side, you just have to maintain your discipline on the stop side of that, and if it gets stopped out at your 5-7% loss, then so be it, and just move on. And again, be ready. But I'd be much more comfortable. Believe it or not, I'm less comfortable being long going into these next couple weeks than I am being short. And again, it doesn't really matter which side you're comfortable in, as long as you discipline yourself to take stop outs, that's fine. But again, just be aware that the market on the lighter volume, this is getting a little scary. This is definitely getting a little scary on the upside. And I think each and every one of us needs to be aware of that. Okay, let's go over to a couple other charts here. I just want to touch base on some things. First of all, the dollar. The dollar has been very, very whippy of late. If I zoom in here and we take a look here, you can see again, this was a retrace breakdown. We broke down, we retraced back. That was a short call I made last week for when we hit that line. Go short, look at the fall that we had on the dollar from that point. It was a great call last week and one of the top calls out there. McDonald's was also a major call on Thursday into Friday, and it was a beautiful trade to the upside. We made a lot of money on that on Friday. Intraday stock chat wise. It was even on the hot charts and alerts of the research center. For those of you that picked it up there, congrats as well. As I said, take half off the table, break even stop on McDonald's now. Again, we're not looking for home runs. You're looking for singles and doubles. You string them together, you're going to win the game. You're going to profit. Okay? And again, that's what it's all about in the money stocks. It's not about making a good trade here, but it's about the full-rounded trader, the full-rounded investor, the disciplined investor, the knowledgeable investor, and the profitable investor. You want to be that? You join the Research Center. You join the intraday stock chat. All right. Now, again, let's take a look at the GLD. The GLD did have a breakdown. We called this as well last week. This was another big call last week. Bear flag. Notice the bear flag right here. You can see downward move, sideways consolidation up into the 20. Look at the drop. That was another call nailed in the Research Center in the intraday stock chat last week on gold. And again, it's amazing because not only were we bearish on the dollar. Usually, if you're bearish on the dollar, you're bullish on gold because they go inverse to each other usually. But we were not. We were bearish on both because the charts were telling us that. And when the charts tell you something, you have to listen. You have to string together the price pattern and time and play it. All right? If you took the webinar, you do a count system right here. It tells you exactly what you want to know, which is it's going down. And sure enough, gold went down. And for those of you that played it, again, another profit. All right, let's take a look at oil. Oil was the only thing I had in a neutral bias last week. I did not have a position on the USO or a thought process on USO. And again, it looks like the smart move. You can see early on down, then late in the week, or at least it was early in the week up here, and then late in the week a little bit of a pullback. No discernible patterns here. You do have a little resistance here, but it could easily pop through that. It's a very, very weak resistance area. Downside support 50 and the 200 are obvious on the charts. All right. Let's go over some charts here. ExxonMobil, guys. Let's take a look. Exxon, look at this. Continued move up. It's incredible. It's a bird, it's a plane, it's Superman, it appears, as we see Exxon. Look at this chart on Exxon. I mean, you almost look at this chart and just have to laugh. I mean, granted, oil's gone up into the 90s now, low 90s, but I mean, that is one heck of a chart, guys. That is one heck of a chart. $58 back here in September. It is now almost $78. Percentage-wise, that's an incredible move on one of the biggest market caps out there in the world, if not the biggest. And again, does this tell us that it's going to pull back tomorrow? I should say Tuesday. No, it doesn't tell us that. Does it tell us that it is overbought, though? Yes, it does. So the key is to look for pattern. Look for a topping tail. Look for a signal in the markets. Look for a breakdown in gold, oil maybe. You know, there's some sort of signal out there. Once it comes, then again, you look for that pullback. And again, there are trades in the Research Center that I've talked about. We've had setups on that I'm even in. You want to join that to really get the inside scoop of what I'm seeing. Chevron, another one, although Chevron stalled out a little bit here. It had a good day on Friday. You can see, looks like it broke out from a little bit of resistance here, but it's not above this high yet. So we want to see that. But again, same general chart as Exxon, although a little choppier on Chevron's chart. You can see up from September, well, it's really July back here. Up, down, up here. 1, 2, 3 pivots to a top sometimes. It is, again, extended, but you don't have the signal yet. Well, technically you could make a case for it. If you don't get above this high, you could say that's a top. But, you know, chances are it could pop above there very easily. Either way, you want to look for the signals. You want to be ready. You want to look at time, price, pattern, all these factors. And again, these are all things we teach. We literally educate you in the Research Center. $49.99 a month. You get it all. You get the trades. You get the profits. You get the education. You get the market analysis on gold, oil, the dollar, oil, everything out there. Everything out there we can cover, we will cover. You will walk away after a month or two as a very knowledgeable investor or trader. All right, let's go over a couple last charts. Obviously, Apple has earnings on Tuesday at the close. Remember, Tuesday is the first trading day this week. So Apple earnings, take a look at this. Very, very extended move here. Very, very longer term extended chart, just like the rest of the market, though. I mean, this is a good market barometer. Look at that chart on Apple. Isn't that incredible? I mean, from 100 just straight up. It's even more incredible if you take a look at the weekly chart, guys. Is that nuts? I mean, is that truly nuts? Go back to 2000 and Apple, right after 2000, 2001, Apple was trading at, $8. And then look at this, $8 for basically chopped around that area for 4 years, 3 years, and then all of a sudden it took off, collapsed, and then took off again. This is an amazing move. You don't see charts like this very often in your lifetime, folks. Not in large caps like Apple or Exxon. Oftentimes you'll see them on small caps because small caps are small. So one big piece of news drives a small cap parabolically. This, though, I mean, that is incredible. Now, it will be interesting to see what Apple's earnings report is on Tuesday after the close. Would I discount Apple and say, oh, they can't perform? No, they've performed every time. You have to tip your cap to them until they have a misstep. Once they have a misstep, look for it to really make a top and then pull back. Based on this chart, on the monthly chart, a pullback even to, this level here is not that far outlandish, which would be back to the 240, 250 area. But again, you don't want to discount Apple. You don't want to count them out at this point. Would I be long? No way in hell. Honestly, no way. Would I be short? No way. I mean, you're playing Russian roulette if you're going long or short that thing. All right, remember, sure bets. If you're an investor who's taking risks, then you're an investor that belongs to the casino, getting a free drink at least while you lose your money. You want to be a pro, you want to be a smart investor, you join the research center, and you take the 85, 90% success rate, 95% success rate trades that we call out, that you get to start and analyzing for yourself. And once you get to that level, you're off. You're golden. You're making money the rest of your life. All right, guys. Let's check out one more stock here. Why don't we check out Amazon? Amazon had a good day on Friday, up $3 and change, basically at 52-week highs at this point. Let's take away a couple of these trend lines here that I had in from other analyzation portions of previous nightly videos. But you can see Amazon started to stall out a little. It seems like it had a great run into December, and then kind of as it was getting closer to the holidays, I think institutions started to unload it, because usually after the holidays you have a downdraft, but it still stayed pretty strong. I mean, in all fairness, it stayed strong, and it's hovering right here at the 52-week highs. Let's see if it gets above 190. I'd be interested in shorting it above 190 if it gets there. Amazon will have earnings again in the not too distant future as well, so we will keep watch on that. But really this week, Apple, IBM on Tuesday after the close, Goldman on Wednesday morning. That's going to be huge. Wells Fargo as well Wednesday morning. The bank earnings should be interesting to see how they perform. Thursday is Google. That's the big one on Thursday. Obviously, there are some other big ones as well. Morgan Stanley as well on Thursday in the morning. And then Friday, GE and Bank of America. So, I mean, you do have some big numbers here coming out this week. It's going to be a tremendous week. I do encourage you to join up, because the plays will be fast and furious. If there's 1 week to be involved in the research center, it's this coming week based on what we're seeing, folks, okay? All right, enough said here. You have a wonderful rest of your holiday weekend here, your long and weekend. Rest up, because next week promises to be Options X and Earnings Central. Economic reports will be out. It's all crammed into 4 straight days. The action will be intense, and I'll be trading and profiting. Join me now. Let's do this.